Hello, it's a Wednesday afternoon. You're welcome to the marketplace. This is where we analyze the market. We talk about trends and investment and how global development impacts business activities here in Ghana. And in the headlines today, UK prepares to vote in a referendum on whether to leave the EU will be actually held tomorrow. We'll look at the implications on Ghana's economy. All these and more we are looking at here on the marketplace, plus some other interesting stories because the GDP rate also reviewed today. We look at it. Did it really go up or down? Yeah, exactly. We gather a marginally improved. We were looking at the implications here on your business in Ghana and in your pocket in particular. You can stay interactive with us. Our Twitter handle is Joy Business GH, and on Facebook is Joy Business. For more, you can log on to myjoyonline.com/business. My name is John Kojo Amwako. We'll be right back after the break. You're welcome back. And in our first story, as some banks cut down lending to deal with the effect of the rise in non-performing loans in the country, the Chief Executive Officer of Universal Merchant Bank, John Ewua, is optimistic it will have no effect on neither the cost nor size of their product to customers. According to him, increasing costs at this time will rather make it more difficult for customers to repay. He said this when executives of Multimedia Limited paid a courtesy call on the bank in Accra.
At UMB, our response has not been to cut lending wholesale. We are looking at our exposures critically, and we invite clients to come to us and talk to us about business. We see every facility or exposure that we put on our books on its own merit, and much as we take cue from the environmentals, we also try to understand the strength of the transactions that come to us for review. So we have not taken any drastic measure to freeze loan lending or to set a ceiling on a certain kind of lending. But what we have said to ourselves is to look at the risk from all the perspectives that will improve the quality of the asset. It's in the interest of the client, it's in the interest of the bank that we work together to ensure that the assets we put on our books are working assets. I'm not a fan of increasing interest rates on a client who is unable to pay. If a customer is not able to pay, as a banker, you have a responsibility of working with the client to see what else you can do to facilitate and make the payment less problematic for the client. Sometimes it may even result in you putting a lot more money to help the client's business resuscitate, so you can, over the period, recoup the funds that you pump into that relationship. The point is that when we lend money, we want to collect money. Interest is not in realizing collaterals. We don't do collateral lending. We want the general public, Ghanaians and non-Ghanaians alike, to feel free walk into any distribution point of Universal Merchant Bank and access our services, because it's a different kind of banking. It's not the routine vanilla banking practices that we have in the country. We have set ourselves on a journey to change the landscape of banking.
And as the UK prepares to vote in a referendum on whether to leave the EU will be held tomorrow, there are growing uncertainty whether the second largest economy in the European Union will change its economic and trade policies towards Ghana and other West African nations. Ghana has significant trade relations with its colonial relations spanning various sectors. To help us explore some of these issues, I've been joined on the line by BBC's Russell Padmore in London to actually look at this and also give us some perspective. Russell, you're welcome to the marketplace.
Well, thank you very much. Good to be with you.
Exactly. Are we in or out before we even start?
This is a very difficult question to answer because if you look at the polls, it appears that both sides, stay or leave, are neck and neck. We've heard throughout the campaign a lot of argument, actually, both sides claiming that the other side has got it wrong. We will know after the vote on Thursday. If you go from what the bookmakers are saying, though, it appears as though the situation is that the Remain or the Stay-In campaign are going to win. But then again, the pollsters have been wrong in the past, and as have the bookmakers. We genuinely don't know which way the British voters are going to go.
Okay. As a Ghanaian and African, for that matter, I'm more interested in the impact of whether we are in or out on our economies, our currencies, and our trade relations. Let's look at it. What would be the major impact on Ghana, for that matter, in the event Britain decides to stay away from Europe?
Well, from the British perspective, if the British decide to leave the European Union, it opens up a whole new area of where Britain would have to renegotiate lots of trade deals. Now, during the campaign for this referendum, trying to convince people to vote one way or the other, we've heard people saying, well, look, ultimately, the European Union is a large trading bloc. It's got great trading relationships with various countries in Africa. Britain would be outside that. Would it have to go back to the drawing board? But then those who support leaving the European Union claim, well, there's nothing wrong with having to renegotiate trade deals. Indeed, countries in Africa could get better access to the British market and vice versa. Because at the moment, the way the things are run, Brussels is in charge. The European Union makes a free trade decision with a various area of the world, such as a country like Ghana or other countries in West Africa, and then that trade agreement applies across the whole EU. There might be a situation it may not suit various industries within the UK. So if the UK was outside the EU, different deals could be renegotiated. Then there is the claim that, there could be lots of problems. Bureaucratic things come in, problems renegotiating some of these trade deals, but ultimately, that's if you conveniently forget that Britain is one of the largest economies in the world, and ultimately, I always think of the situation at the moment with German manufacturers, the maker of Mercedes cars, Daimler-Benz. Do you really seriously think if Britain left the European Union that Mercedes would not sell its cars to UK customers? The UK is part of the global trading environment, just like Ghana is. So
exactly.
There could be advantages for Ghana and disadvantages. It all is up for grabs. We'll know after Thursday.
Okay. We do know, I mean, Britain in Europe, with the European Union, is actually impacted significantly on the currencies of some African countries, even though the pound in itself on its own has not been doing quite well globally and of course in Africa here. So in the event Britain decides to stay out of the EU, what's actually going to happen to the currency, the pound, and those that rely on that particular currency for transactions in Africa and Ghana for that matter?
Well, it has been said that the British pound this year alone, with all the uncertainty, has been losing ground, particularly against the US dollar. I saw an interesting graph earlier today where they compared some of the world's major economies to the US dollar, and with some of the economic uncertainty going on, those other currencies had been advancing against the US dollar, particularly with the price of oil falling, whereas the British pound had been losing ground. Sure, it's regained a bit this week, and it has swung one way then the other as different polls have come out and shown perhaps that Britain is going to leave, then suddenly Britain is going to stay the following day according to a different poll. The markets have been reacting, particularly the currency markets. The British pound has been under pressure. Now, what that might mean, for example, let's just say that the British decide to leave the European Union, and if the economists are right, the British pound takes a tumble. That would mean, let's say, that goods produced in Ghana would get more expensive for British people to buy. Or alternatively, it might be that those using the Ghanaian cedi might find that ultimately things made in Britain were cheaper to buy because the British pound has fallen in value.
Okay, Rasmus, finally, can you tell us for a fact that in the event this do happen, that means that what I mean is in the event Britain do actually dissociate themselves from the European Union, are we going to see some cut in aid and other development assistance to Ghana?
Well, this is an interesting point. Do remember the British government still makes its own decisions about where it distributes aid. It is guided by the European Union with some EU-wide policies as well, but ultimately that could change. It could actually be a situation that if there was a situation the UK was outside the European Union, it may not necessarily have to follow EU rules. It could give more donations to countries in Africa. Of course, it could go the other way round, that Britain, once it's in charge of its own economy again outside the EU, it would make its own decisions. I do think one way or the other, following Thursday's vote, there's going to be an historic shift If Britain is outside the European Union, there are going to be great changes. But if Britain stays inside the European Union, the very fact that this referendum has taken place will force the bureaucrats in Brussels to revisit a lot of the ways that the EU is run, and that could also have an impact on trade and, of course, donations given to countries in Africa.
Okay, we thank you very much, Russell Padmore, there for your time here on the marketplace. Russell Padmore is our correspondent at the BBC, or he also works for the BBC as well. Now, moving on here on the marketplace, government will today hope to raise up to 1 billion cedis from investors by issuing a 5-year bond. Today's auction will be handled by 3 financial institutions inside the Bank of Ghana. But could this help reduce government cost of borrowing? George Afe has more in this report.
Today's bond sale will not be done the usual way that government goes about raising funds. First, 3 institutions, Barclays, Stanbic Bank, and finance house Strategic African Securities, are acting as transaction advisors or leading the process instead of the Bank of Ghana. Again, the whole auction will last for 2 days, so we are expecting the bond sale to close tomorrow after I receive all the requests from investors today. Also, government has found an interesting way to deal with the rising cost of these bond issuance. So it's looking at an interest rate ranging between 23 to 24.47%. So, depending on the rate it gets from investors, that would influence the amount government would take from them. Now, this could mean that government may not take all the 1 billion Ghana cedis it is targeting, even if it's able to raise all the amount. It is hoping to use funds raised to pay off debts that are maturing and finance some infrastructure projects in the country. However, there have been concerns about these bonds that government issues because of its impact on the rising public debt, which stood at almost 100 billion Ghana cedis as at December last year. But the Finance Ministry has maintained that it is rather using majority of the funds raised to pay down the public debt, which the ministry believes will go a long way to reduce it. But some have also argued that the interest paid on these debts are rising, so it could impact the public debt negatively.
And the Ghanaian economy grew marginally for the first quarter of this year. That's according to the latest GDP estimates released by the Ghana Statistical Service. Jojo Afe spoke with the government statistician, Dr. Philomena Nyako, and he joins me here in studio to tell us more on that. Jojo, welcome to the marketplace.
Thank you, John, and how are you doing?
I'm very, very great. Anytime you're here, I'm very happy because I know you have a lot for us. Actually, what exactly went on there when you were there? What
well,
did
a lot
really
of
pick
things
up
happened. Let me help our viewers and me, myself, and you as well. And when it comes to GDP, basically the final price of goods and services, or the value the final goods and services produced in the economy for a particular year. And here we're looking at the first quarter of this year, which grew by 1.1% just for that particular quarter of that year. Why or what happened?
Exactly.
It was because of some substantial performance of the service sector as well as industry. And that is why we saw it go up marginally. It could have been worse, but if it hadn't been these sectors that did a little bit better for that particular quarter, John.
Is the government likely to meet its end-of-year target from the way, from where you stand?
Let's first look at the sectorial performance.
Exactly.
And we have agriculture
fine. That's fair.
doing 12.2%. That was fueled by the performance of livestock. We look at industry that did 27.7%. Also, there was a lot of production in the logistics sector as well as some other sectors. But industry, again, when it comes to mining, quarrying, as well as oil, it didn't do well at all. But for services sector,
it is expected. Prices of crude and others on the international market, and mining, for example, had its own difficulties with this Galamsey, and even Anglo Gold Ashanti at a point in time experienced some difficulties. I think it's expected, isn't it?
For the services sector,
yes.
it did over 60% in terms of growth, and that was due to the communication subsector that fueled this performance. And let me come to
the
whether
target.
government to meet in the budget. You're looking at somewhere around 5.4%. Now, for last quarter of 2015, it did 1.1% growth.
Yeah.
For this quarter, it done 1.1. So all other things being equal. And if these sectors are still going to grow at 1.1, 1.1, then my rough calculation, we're looking at around 4.4%.
Exactly.
And that is just by a point margin up,
exactly.
according to what the IMF is projecting for this year. World Bank is saying 5.2, and then government is saying 5.4. So you can do your own extrapolations and calculations as to whether government might indeed meet its end-of-year target or not, John.
But I mean, from what you're saying right now, at least government is on course. The nation Ghana is on course in respect of the IMF and other programs that we are affiliated to.
Yes, in terms of performance, I mean, some would say for the economy to grow marginally might not be wrong, but again, we could have done better. But if you miss out on target, that is where we also understand that government or the finance minister might be going before Parliament to review the estimates.
Exactly.
Looking at what they have at their disposal and their projections, maybe the 5.4 might be too high. We see the finance minister go before Parliament and revise these estimates and say that maybe because of X and Y, we think that we can grow at 4.5% at the end of this year.
We thank you very much, George, for passing
John,
through.
And all the best.
Always good and on point. That was my colleague, George Uafe, who is you can say he's the macroeconomic editor on our desk here, Joy Business, and also, yes, both radio and television. I have to actually put it bluntly. So we move on here on the marketplace. And domestic airline operators could soon enjoy some respite as their long-standing concerns of overtaxation could soon be addressed. This is because government has initiated plans in this regard. The operators were directed to start paying VAT on their operations, resulting in a sharp increase of airfares. But Transport Minister Vivi Kwete says they are working to address the concerns.
Really, we have listened to very carefully, and I give them assurance that definitely it's an issue I'm taking up with our friends in the Finance Ministry. And Finance Ministry clearly, at least preliminary response is positive. It's a question of ensuring that we can get it, accomplished as soon as possible, so we can bring some relief to the domestic operators. Clearly, they have a case. In that case, has to do with competitiveness. So it's an issue that I'm sure will get resolved. So I'm constantly trying to get finance to quickly get me clear timelines so that we'll be able to get some good announcement.
We're taking a short break. We'll be right back after the break. You're welcome back. And the managing director of ADB, Daniel Asiedu, says agriculture would remain a priority for the bank as it works to the best in the bank in the country as the next 3 years. He tells Joy Business they are open to providing financial support to profitable agri ventures.
ADB is one of the few, if not the only bank, that has special focus on agri because of who we are, and that is not going to change. What we have done in the past is support agri aggressively, and we'll continue to do that going forward. I think one of the things that has to be, we need to let the public know is that although we are ADB, our focus has not changed. We will still continue to support agri. And so if there are agri businesses that need help, of course, they can always look up to ADB for help.
That's supposed to be good news for agricultural workers and those engaged in agriculture. But speaking of profitable ventures in agri sector, today on the Joy Business Van, we'll be telling you the story of CEO of agro processing company MJAP, who is making big business out of smoked fish. Let's take a teaser from there.
My wife went to the market one day to buy this type of fish, and when they get home, in fact, before she could use it, 2 of the fishes were not wholesome. And I went with her to the market that day, and the place they were selling this fish was not quite hygienic, and it was exposed. It was displayed on the tabletop. You can see the way we were using their hand to dry off the flies and all that. So when we came back, and my wife told me, "Oh, husband, look at it too. Even the fish we bought, this type of fish also costs more than the sea fish. And for us to throw away 2 of them to the dustbin, So I said to myself that can't we sell this fish in a different way, in a more hygienic way than the way it's been done all over the years. And when I was a little boy, I used to go to fishing with my uncle, so I know how this fish tastes. So I told my wife that, look, now that we have lost our license, we are no more in the port working, I'm thinking of what to do. I think I'll take up this challenge.
You should expect the full version on Business Live today at 5 to 5:30 there. It's an interesting story you should not miss. Now, time to do the market. We look at here in Ghana how your investment in the Ghana Stock Exchange perform. We'll be looking at the currency and the commodities market as the American Mercantile Exchange is still on and doing very well. Now, we're starting from South Africa, where the FTSE/JSE All-Share Index appreciated 750.39 points as the year-on-year stands 1.90. And in Nigeria, they're having difficulties though, but the market is not doing that bad after I recorded an appreciation of 757.82 points and returning 2.11 in the positive to their investor. That's very good. And also in Egypt, EGX30 index marginally declined by 82.37 points as the year-on-year still remains positive 4.74, and the Moroccan All-Share Index marginally also appreciated by 11.57, and the year-on-year remains in the positive regions of 1.19%. Now, the Nairobi All-Share Index in Kenya marginally also improved, but they have issues in there to be actually updating you on that as it grew by positive 0.15 point, but the year-on-year remaining 1.19 in the positive region. Moving on here on the continent of Africa and looking at how the major trading equities market doing. Tunisia's twin index also depreciated by 15.78 as the year-on-year grew to 7.16% per annum. And in Ghana here, we saw a general activity level of positive 3.63 points as the year-on-year still remains 11.20 in the downside or negative. So for those investing in the Ghana Stock Exchange, generally, you are losing 11.20% of your investment on the Ghana Stock Exchange. But like I always say, as the market declines in value and in volume, this is the time you should go in, buy cheap so you can actually sell high. It makes good business sense, right? Exactly. So now let's look at the Bourse Regional Development Mobilier, the composite index, which measures the overall activity levels of the Francophone nations in West Africa. We're looking at that, and it did a total volume of about 1.87 as the year-on-year still remains 12.54. As I always say, one of the most performing equities market on the continent. Now, finally, let's do the Semidex of Mauritius, which declined negative 0.87 as the year-on-year still remains 3.64. Now, let's look at Ghana. Let's come back to Ghana and look at what the equities market looked like in terms of the summary of the performance of that particular market. The market did see a total volume of 1,298,878, one of the highest in terms of performance for the year, at a value of 10,266,657 as against 621 the previous day. That brought market capitalization to about 54,512,019,000 Ghana cedis. That's exactly how much it is. And as I said earlier, the composite index is still remaining around 11.28. Recovery rate very, very slow. But the financial index, also something very critical we should be watching, cruising around negative 14.26%. Now, the top four equities that really moved the market or the Ghanaian market yesterday included Carl Bank, EGA, that's Ecobank Ghana, UT Bank, and Total. Carl Bank returned 1 peso to the investors' capital and opened today's market or today's trading at 81 pesos per share, as Ecobank Ghana also added 1 and trading currently at 6 Ghana cedis 35 pesos per share. UT Bank recorded some appreciation of 1 peso and currently trading at 9 pesos per share, whilst Total lost 1 peso and currently trading at 3 Ghana cedis 99 pesos per share. Now let's look at Nigeria. The top still standing is about Total, Guinness, Wando, Diamond Bank, Unity Bank, all recording some positive returns between 2.82 Naira to about 4 Kobos respectively on that top 5 list of the Nigerian market. Now let's look at the top 5 losers on the Nigerian market. Topmost among them is the Livestock, Afroprudential, Transcorp, Tiger Brand, and Skybank, all doing between 1 and 4 kobos respectively in the downside. Now we move on to the commodities, and the New York Mercantile Exchange, as we speak, is actually recording or projecting crude oil at $50.73 per barrel after gaining just a cent to its value as we speak. And gold, after losing $3.38, is currently trading at $1,126 per ounce. And cocoa also just gained about $6 and currently trading at $3,152 per ton. So that's actually the 3 top commodities of Ghanaian interest there on the international market. And finally, let's look at how the cedi is actually faring against the top 5 major trading currencies. We did speak to Russell Padmore in London, who said that in the event Britain actually decide to pull out of EU, we're going to have some challenges to do with our currency because it's somehow dependent on that particular currency. So let's look at how the cedi is faring against the British pound. Currently, the cedi is losing against the US dollar, losing against the British pound, losing against the the euro, and then the Chinese one. The only currency the cedi was able to actually gain against is the CFA franc, which currently is one of the strongest currency on the continent. So that'll be it here on the market, and that'll be it on the marketplace here. You can stay interactive with us on Twitter. Our handle is JoyBusinessGH, and on Facebook is Joy Business. For more, you can log on to myjoyonline.com/business. My name is John Kojo Amwaku. Have a good afternoon.